Good evening. This is Tom Alexander. It is Sunday, May 1st. It is about 6:30 p.m. in beautiful Charleston, South Carolina. This is the stock market weekend update for the week that begins tomorrow, June 2nd. Again, today is June 1st. Happy June. May was quite a month. May was the strongest month in U.S. indices in, I don't know, many, many years. And the market has basically gone into a sideways chop for the past almost 3 weeks. And this is something that was discussed well over 2 weeks ago that I thought was going to occur. And let me show this real quickly. This is going to be the real focus of what we talk about today. This is the profile view of the market. Now, this is an intermediate term view. Each letter you see here is 1 week of trade. Each profile unit is a quarterly profile. It's a quarterly auction. Now, I'm not showing that, am I? Here we go. Now I'm showing it, by the way. Okay, but before I start this, I want to, those of you that are new or just finding me on YouTube, you can go to the website alexandertrading.com here and click on weekly update. This is free. You do not have to pay for it. And you can get this weekend's report, the written version of this weekend report that has a PDF you can download if you want to copy, print out the charts that have the levels that we're going to talk about, has the verbiage. All of these are charts we're going to be discussing, but they're on the website as well. You can also go back and you can see the progression. And I encourage you to do that because the last 2 or 3 weeks have been a really great lesson in the auction market process of development and specifically how to use the market profile graph. The market profile graph can be a wonderful tool at times that gives a unique perspective on market condition, which is what it was intended to do. It is a charting format. It is not magic. It's a tool. I use the market profile graph along with bar charts. Those are my two primary market perspectives that I use. I'm always trying to analyze the market through the lens of the bigger picture of the auction market process of development, which is it's price action, but it's a very specific view of price action. And I'm not going to get into a big tutorial on that tonight, but this is what I do. And I try to give a little bit of a trade lesson into price action and how to analyze the market through price action every week. So there could be benefit to you if you choose to go back and review some of these weekend reports. Okay, let's talk about this weekend, what's going to happen. We've been in this mind-numbing chop now for several days. I want to go down in time frame now. And I'm going to go to, each one of these profile units now is 1 day of trade. Each profile unit is 1 day auction. I've split this out. These are basically 60-minute segments. Each letter is 60 minutes. That way I can get more on the screen. But the market ramped higher into 512 and you can see it's done nothing except go sideways since. Now, if you notice, and I'm going to go up here and see if I can grab a tool. Here we go, a drawing tool. This is all one auction. This entire area here is one auction. So you have this overlap that's been going on now for almost 3 weeks. And quite conveniently, most of last week, actually all of last week, since Monday was a holiday, Tuesday, Wednesday, Thursday, and Friday formed an auction. So the resolution of this auction, and it's going to break up or down, is likely the key to the bigger picture that I showed before, the profile view. Now, what I want to do, I want to take this and I want to combine the past 4 days into the auction that it is. And you can see here. And again, these charts are on the website under alexandertrading.com, weekend updates, and you can see these charts that I have. Now, this is the last 4 days of trading. This is that Gaussian shape that we all envision when we think about market profile. And you can see, we have this have the nice volume node pretty close to the midpoint of the range up here at the upper and lower extreme of this distribution. A distribution is a range. This is where we closed on Friday. So we are extremely likely to have a sharp move to the upper to or through the upper extreme of the larger degree auction, of which this is a part, or to the downside. And if there's follow through, we could see a trend that lasts several days or maybe several weeks. But this structure right here is a key to the whole thing. This volume node right here. In general, as a trade strategy, you want to be long above 59.16. You want to be short below 58.96. Now, they never make it that simple. There could be some false moves up and down. The auction may last another day or two, etc. But a resolution is coming. We are closer and closer to it with each passing day that we don't have it. And you need to be prepared to use different strategies and tactics regardless of the time frame you trade, because the market condition is highly likely to be very different very soon than it has been for the past 2 or 3 weeks. That is the practical takeaway from what the profile view is telling us about the current market condition. Now let's take a look at the indices, and what I have done here is what I do every week. And I take all of the primary US trading indices and I break it down into something that is very simple, showing you levels that are important, and the levels are quite clear right now, and the levels are quite important right now. And I have this level, these are the levels. Oh, by the way, you can see here, and I highlighted this on the written report. We've had very little net change in the primary indices over the past 2+ weeks, which is reflective of the balance that we have been in over that time frame. We're not that far from new all-time highs in any of the indices, except for the Russell, of course. That's the SPX. Let's just go through, see if there's anything that I might be forgetting to make note of for you. You can pretty much see for yourself. That's the index. Let's look at the Dow. Here's the Dow. The Dow's about a little less than 7% from a new all-time high from Friday's close. And then the Russell, you can see the Russell is a long way from a new all-time high close, it would be almost 19%. And the equal weight S&P, which is lagged of late, because once again, we have 7 stocks driving the market. There's the equal weight. And then last but not least, the New York Composite, which has the least amount of distance to a new all-time high. And it is the broadest base of any of the indices that I just showed. So we're a little less than 3% from an all-time high in the New York Composite. Now, I do use internals, market internals. I'll look at VIX. VIX is not telling us anything. It is not at an extreme. VIX is most helpful when it spikes higher. It's much more effective, as is Brett, which we're going to talk about in a minute, at identifying lows than it is highs. If we do break higher, VIX will go lower. If we break lower, VIX will go higher. And we'll keep an eye on it to see when it reaches an extreme, because it invariably will. And if we're going to decline out of this balance area, VIX can help us be a guide to a potential bottom when it coincides with price reaching one of these levels that are highlighting. And last but not least, those of you that have been following me for weeks or months or years know that I use Brett. This is NYSE data. The red line is a 10-day moving average of NYSE advancing issues. The green is a 5-day. The histogram, the blue histogram is closing Brett. You can see we came right down to the 200-day moving average. This green arrow was the last time we had a 200 a negative 2000 breadth reading. And typical of bull trends, and this is only clear in hindsight, when you have a negative 2000 breadth reading, you're almost always close time-wise to a low. It happened here, it happened here, it happened here. This is bull market behavior. Now, when we get in a bear market, we will begin to see clusters of negative 2000 breadth, but apparently we're not there yet. The 10-day moving average, the 5-day moving average are basically reflective of the sideways action of the last couple of weeks. You can see Brett down here has been up and down on a day-to-day basis, which causes the moving averages, which had reached an upper extreme, to go net sideways. So they are ready to break either way with Brett. If we reach a downside extreme, we'll make note of it. And similar to how we use VIX, if the indices are trading into critical downside levels and we see some sort of extreme reading in the 10-day and the 5-day, probably near a low. So that's where we are as we enter a brand new month. It is the last month of the quarter, and we will see what happens. You guys have a wonderful remaining few hours of your weekend. I'll speak with you again very soon. Oh, by the way, if you've gotten this far and you found value in this, please subscribe and like the video. If you want to make comments, that's great. Ask questions. I will always respond. Enjoy yourselves. I'll talk with you again soon.